Alternative investments. Alternative investments in CFA Level 1 introduces asset classes that differ from traditional equity and fixed income investments, providing investors with additional sources of return, diversification, and risk management opportunities. The curriculum covers private equity, private debt, hedge funds, real estate, infrastructure, commodities, natural resources, and digital assets. Candidates study the unique characteristics, ownership structures, compensation arrangements, and investment vehicles commonly associated with alternative investments. The topic also explains direct investments, co-investments, and pooled fund structures used by institutional and individual investors. Understanding alternative investments is important because these assets often exhibit different return patterns and risk characteristics compared with traditional securities. Alternative investments broadens candidates' understanding of portfolio diversification and modern institutional investment strategies. Performance measurement and fee structures are major components of the alternative investments curriculum because evaluating returns in alternative assets differs significantly from traditional investment analysis. Candidates learn how to calculate and interpret investment returns before and after management fees, incentive fees, and carried interest arrangements. The curriculum explains performance appraisal techniques used to assess the effectiveness of alternative investment managers and fund strategies. Because alternative investments are often illiquid and less transparent, performance evaluation requires careful interpretation of reported returns and valuation methodologies. Candidates also study how compensation structures influence manager incentives and investment behavior. Understanding alternative investment performance metrics helps investment professionals evaluate whether risk-adjusted returns justify the costs, illiquidity, and operational complexities associated with alternative asset classes and specialized investment vehicles. Private capital investments, including private equity and private debt, are important areas within the curriculum because they represent significant sources of institutional investment activity. Candidates study how private equity funds invest in non-public companies to improve operations, increase profitability, and create long-term value before exiting investments through sales or public offerings. The curriculum also examines private debt investments, including direct lending and other non-bank financing arrangements that provide capital to businesses. Candidates learn the diversification benefits and unique risk-return profiles associated with private capital investments. These investments typically involve limited liquidity, longer investment horizons, and active management participation. Understanding private capital markets helps investment professionals evaluate alternative financing structures, assess investment risks, and analyze opportunities unavailable in traditional public capital markets. Real estate and infrastructure investments are emphasized because they provide investors with income generation, inflation protection, and portfolio diversification benefits. Candidates study the characteristics of real estate assets, including residential, commercial, and industrial properties, along with the economic factors influencing property values and investment returns. The curriculum also examines infrastructure investments such as transportation systems, utilities, and energy facilities that often generate stable long-term cash flows. Candidates learn how these investments differ from traditional securities in terms of liquidity, valuation, operational risks, and financing structures. Understanding real assets helps investment professionals evaluate inflation-sensitive investments and long-duration income-producing assets. These concepts are particularly important for institutional investors seeking stable returns and diversification within multi-asset investment portfolios. Natural resources and hedge funds represent additional categories of alternative investments covered within the curriculum. Candidates study raw land, timberland, farmland, and commodities, focusing on their economic drivers, inflation sensitivity, and diversification characteristics. The curriculum explains how commodity prices are influenced by supply-demand dynamics, geopolitical developments, and global economic activity. Hedge funds are also examined in detail, including their investment structures, leverage usage, trading strategies, and risk-return characteristics. Candidates learn how hedge funds differ from traditional pooled investments through active management techniques and flexible investment mandates. Understanding these alternative investment strategies helps professionals evaluate non-traditional sources of return and identify how specialized investment approaches may enhance portfolio diversification and risk-adjusted performance across varying market environments and economic cycles. The final section of alternative investments introduces digital assets and distributed ledger technology, reflecting the growing importance of financial innovation in global markets. Candidates study blockchain applications, cryptocurrencies, tokenized assets, and digital investment vehicles while evaluating their investment characteristics relative to traditional asset classes. The curriculum explains how digital assets may offer diversification opportunities but also involve substantial risks, including volatility, regulatory uncertainty, technological vulnerabilities, and liquidity concerns. Candidates learn how distributed ledger technology may transform payment systems, financial transactions, and asset ownership structures. Overall, alternative investments equips candidates with a broader understanding of evolving investment opportunities beyond traditional securities markets. Mastery of these concepts supports portfolio diversification, institutional investment analysis, and strategic allocation decisions within increasingly complex global investment environments.